Real estate investors haven't done well since a real estate mogul became president-elect. It'd be some irony if Donald Trump were to preside over a slump in the US commercial property market. But is that likely? Shares of listed real estate companies are down almost 4% since the election on November the 8th. The sharp rise in US interest rates since then has made the dividends on real estate investment trusts look relatively less appealing, and there are fears that the higher borrowing costs will choke off the rise in property prices. Meanwhile, the holders of bonds backed by commercial mortgages are also nursing losses for similar reasons. Now, property prices are almost certainly going to slow from the current rate. The 8% growth in the past year, driven by a 14% jump in apartment prices, seems too racy. There was no shortage of potential headwinds even before the jump in rates. Regulators have repeatedly warned banks to be cautious when extending commercial mortgages. And another major source of funding, the CMBS market, could shrink when new rules on risk retention come into force on Christmas Eve. Meanwhile, vast swaths of American retail space could be left empty by the consumer switch to online shopping. And there are signs of overbuilding in the hotels sector, particularly in the New York market that Mr. Trump knows so well. But on the other hand, construction of new office space is only now starting to pick up, suggesting that the cycle still has some way to go. As for the rise in rates, the effect may not be as dramatic as some fear. Yields on commercial property are historically high relative to treasuries, so the increase in treasury yields can be absorbed without necessarily affecting property prices. Higher rates also may not materially change the outlook for delinquencies next year. The market is already midway through absorbing all the pre-financial crisis mortgages that are coming due for refinancing. Those original loans were written at interest rates far higher than those that prevail today. So the prospects for the commercial real estate market in 2017 are not as gloomy as they might first appear. If the new administration cuts taxes and red tape and improves the US economy, it might even get a boost. And of course, it always helps to have friends in high places. Foley for the Financial Times.